Hi, and welcome to the Money Tips No One Told You podcast, presented by First Pioneers Federal Credit Union. Here at First Pioneers, we're passionate about helping not only our members, but our community becomes financially successful. That success often starts with basic knowledge, things like knowing how different account types work, to understanding terminology, or even tips that make your life easier. The more you know, the more success you will have as you handle your money and your finances. Let's get started. Hi, I'm your host Heather, and today we are back talking about good financial habits. As we talked about last time, we all have habits in pretty much every aspect of our lives, from how we brush our hair, our eating habits, our driving habits, and even our money habits. And again, some of those are good, and some of them, well, maybe they need a little work. And the truth is, the habit that many of us need a little work with is dealing with our money. So last time we talked about developing the financial habit of budgeting and tracking your spending. Today, I want to talk about savings. Savings may actually be the most neglected part of our budget, but the reality is it's actually probably the most important. So these days, there's many of us that we're living paycheck to paycheck, and I get that it's hard to make saving a priority, but let's say something happens, an injury, an illness, medical bills, or what if your car breaks down? Now, of course, that's an unexpected expense, but where will you get the money for it? So let me share a little recent data with you. It says that 39% of Americans would have a hard time covering an unexpected expense of just $400. And realistically, a lot of those emergency expenses we just talked about, those can cost a lot more than $400. So how do we make that number better? Well, this is why savings is so important. Even if the amount you save is really small, it adds up, and it adds up a lot more quickly than you think. So when you're making your budget, because I know you're all doing that, the first category should be paying yourself. And paying yourself means putting money to the side in a savings account or even multiple savings accounts. So what does saving really mean, and what is it for? Well, generally, saving is done for either short-term or long-term goals. So a short-term goal, that's one that you hope to reach within, say, a 6-month to 3-year time frame. Then a long-term goal is where it's going to take anywhere from, say, 3 to 5 years or even longer to reach that goal. So to really explain the goals well, let's first talk about the 3 categories of expenses. First, you have fixed expenses. So these are things that really shouldn't change from month to month. That's going to be your rent, your car note, things like that. Those are probably always going to stay the same. Second, you have a variable expense. These are expenses that you know about, but they may vary, like your groceries. Those could be different depending on what you have going on in your life at the time. For example, in the summer, maybe your kids are home more, or around the holidays, you're going to be cooking more. So maybe your grocery bill will be a little higher then, but other times it'll be a little lower. Lastly is a periodic expense. Now, these are ones you know about as well, but they only come up occasionally. So think things like birthday gifts or big events or holidays, maybe a vacation, school fees, school uniforms, things like that. This is where your short-term goals can come into play. Because for a variable or periodic expense, you may want to consider setting aside a certain amount of money each month to cover that expense. Then when the time to pay the bill comes or to buy the gift arrives, you have the money to take care of it. You'll often hear people at a bank or a credit union refer to that as set-aside savings. So let me give you an example of that. Let's say you want to go on vacation and the cost of the vacation will be about $2,000. And you know you're going to leave in about 10 months. So you can divide the cost of the vacation, so in this case $2,000, by the 10-month time period. And this tells you how much to set aside each month to reach your goal by the time you leave. So in this case, you would set aside $200 a month. And the truth is, you could do this really with any kind of expense. Like, let's say you pay your car insurance every 6 months or annually. You could set aside the money for that. Or you want to buy a new computer. Or you're going to have school tuition. You could use set-aside savings to help you take care of those expenses. And this is actually just a great way to take care of those bigger expenses that you know are going to come up throughout the year. Another way set-aside savings would be helpful is for things like routine maintenance that's going to come up on your home or your car. So these are expenses that you know are going to come, but when they're needed actually could be a little tricky to nail down. The cost of those could vary as well, and some of them could end up being pretty big ticket items. So let's say you are going to need new tires for your car, or at your home, your air conditioner needs repair, or maybe your roof needs repair. But you also need to keep in mind that at some point, things like air conditioner and roofs, they're probably going to need to be replaced. Besides just the regular wear and use, at some point something might break, and then that becomes a sudden expense. So having something set aside in a savings account can really be helpful in that instance. Now let's talk long-term savings goals. This may include something like paying off your mortgage or paying for your child's college tuition. And the really big one, retirement. I know many people don't think about this one, especially while they're young, but saving for retirement is so important. And I really can't stress that enough. The earlier you start, the better off you'll be when the time comes. And I know it may seem crazy when you're 20 years old to take part in a 401k at work, but if it's offered, take it. It is a great habit to start, and you will be so grateful in the long run. And the really fun thing is, companies will often match a percentage of what you put into that 401k. And then let's say you ever leave that job. Well, the money you put in will always be yours. The company portion may or may not be yours to take. It depends on the company policies, but just having what you've put away can be huge. And look, don't worry, we're going to talk about 401ks more in depth in another episode, and we'll explain it further. But for now, just know, if you can do it, do it. The last type of savings I want to talk about is emergency savings. And this actually goes back to where we began. This is for your unexpected expenses, a broken down car, an injury, a hospitalization, something like that. Here in the South, where we're located, we have to consider things like hurricane damage. Insurance deductibles can actually be in the thousands of dollars depending on your claim. And you never know when you'll be grateful for having that deductible in a savings account. So keep in mind emergency savings as well. The sad thing is, saving is often the one thing that people put off or sacrifice. They think, I'll do it later, or we'll be fine, or, those things won't happen to us. But having that savings when you need it most can really make a big difference in your life. So, I'll say it again. Savings is one of the most important parts of your budget. So one way to make saving easier is to plan the amount that you want to set aside each month. Your bank or credit union will actually allow you to have multiple savings accounts. So maybe consider having a different one for each one of your needs. For example, maybe you have one that's set aside for emergencies or repairs, and then another one that's for your shorter term goals, like upcoming bills or vacations. Also, ask if your bank or credit union has any specialty savings accounts, like maybe a Christmas club or a vacation club, because that may be something that can really help you out as you plan as well. One more thing that might help you out. Are you using direct deposit for your paycheck? If you are, go to whoever does the payroll at your job and ask them to deposit money from your check into multiple accounts. This is actually a really great way to make sure that money goes into savings accounts. And when you never see it in your checking account, then you probably won't think about spending it. What's the saying, you guys? Out of sight, out of mind. So when it's in that savings account, then you can just watch it grow. Now, that doesn't mean that you can't access it. Easy ways to do that would be if you're using online banking, or if your bank or credit union has an app that you're using, you can use those very easily to transfer money from one account to another when you need it. So what's the key takeaway from today? No matter how you do it, make saving part of your plan. And if you need help figuring out how to set up accounts or work with your direct deposit, ask your bank or credit union for guidance. That's what we're here for, and we are always ready to help. Thank you so much for joining us today. You've just watched our YouTube version of our Money Tips No One Told You podcast. There is also a blog version on our website at firstpioneers.com. You can always find us at any of our branches in Lafayette or New Iberia, Louisiana, on our website or on any of our socials. We're here to help you in any way that we can, and we really appreciate you watching. See you next time.